If the past few days and weeks you've been watching the volatile stock markets and getting a little concerned and asking yourself, as well as many others around you, the big questions, well, to answer all your questions on the stock market momentum, I'm joined by G. Chokalingam, founder, Economics Research, also a market veteran. Thank you for your time, sir. First, I'd like to begin by asking you, a lot of people want to know that, look, what is the road ahead for India's stock markets? Is the bull run over? And is this really a good time for investors to make new investments?
Yeah. Road ahead, yes, till Jan end, the market could be weak because of the forthcoming budget. It is most likely that FIs would sit on the sideline because oil price is going up and rupee also weakening. So they would like to wait for the fine print of the budget. And that weakness may continue till March also because post budget, in case the people expectations are much above the budget, or Donald Trump, starts imposing a lot of tariff measures for India also. So there is a possibility that till March also the correction may continue. But does it mean that the bull run is over? According to me, no. Around 60 lakh crore got wiped out in the last 6 months, and market cap is down 13%. But it's a deep correction. Some more correction is possible, but it is not over for a couple of reasons. One, we are seeing the flood of retail investors. Even in the last 5 weeks, more than 35 lakh new investors have come into the market for the first time. And secondly, if not 7%, we are confident of growing economy at 6.6%. Even that will be the second fastest. Third, I don't think the US leadership can go drastically against India because we are the third largest, and I don't think any leadership in USA can antagonize both India and China. So you have to ultimately, make some compromising hand with India. So I don't see any serious measures. So therefore, and also this correction has given a lot of attractive universe. It has thrown up attractive space to reinvest. The only problem was there are two set of stocks in a small and mid cap. One were overvalued, all new age company, new IPOs. The others traditional businesses, traditional companies, which did not participate, but when the meltdown came, they also fell. So this is another reason I am bullish. There are a lot of hundreds of stocks in the small and mid cap still offer attractive opportunity to invest and make money. The quality stuff. So therefore, I believe FY26 will be a phenomenal year once again after this deep correction to make wealth in the market, especially from the quality small and mid cap stock.
All right. Well, for those wondering, okay, then where to invest before Donald Trump, US President elect, officially takes charge and assumes his duties as the US President? What sectors to look at before the run up to all the policy changes, likely policy changes, like you said, and all the expectations really doing the rounds?
Yeah. So I would focus on small and mid cap. One can invest 70% of the equity into small and mid cap. Those who can take little risk, 30% in the Sensex and Nifty. Having said that, as far as sectors, it would be surprising. Once again, I would suggest the banking sector. Yes, banking sector stocks have gone through a lot of meltdown in the last 2 months, but still I favor because still we are sitting on 10-year record high quality of assets, and credit is still growing in double digit. So it is very difficult to see any sector which is growing its business in double digit. So after the post steep correction, attractive valuation is there. And second set, small pharma companies. We have seen in the last 10 years a lot of acquisition stories happening that would again happen. And also the rupee depreciation is positive for pharmaceutical. So small and mid-sized pharmaceutical companies one can look at. Third, one can look at the small and mid-sized IT companies. Yes, I am not optimistic on whole IT sector because in dollar term it is still growing. The revenue growing in 2 to 4% only, and the large companies are not able to grow in a strong manner. That means, till 2 3 years ago we saw a lot of acquisition stories in IT space that might possibly get revived now because the whole industry is not growing, and also the buyback is not very attractive because of the tax changes. So large companies can once again relook at acquisition. So these are the three. Apart from that, there are many unique stories in terms of holding a lot of rich investments available at 60, 70, 80% discount to the investment holding. Then there are a lot of companies which have got a lot of land bank in listed space. Even morning we saw in the media that some land deals are happening. India, Mumbai is a V-shaped. You can't reclaim the land beyond a point on three sides. So, which means the land bank is limited. So, there are many companies which are sitting on the land bank directly or indirectly in the listed space. That is one sector one can. Lastly, the small quality cement companies. In the last 1 year, we saw at least three deals in the listed space itself, happening at the valuation of $80 to $118 per ton. There are few good quality cement companies available at attractive valuation of $45 to $60. So these are the some of the space. So while selecting the stocks, please do not compromise on the valuation comfort in terms of PE or EBITDA or the replacement value of the company. Do not compromise on the management quality. See that they have some listing experience and they fulfill what promises they gave in the last few years. And third, see that they are not overly indebted or overly having a working capital crisis. There are some companies, the receivable and inventory itself is equivalent to annual sales. So be careful while selecting the companies based on these three parameters. Believe me, the small cap, high risk, high return, but you can mitigate the risk if you do your homework properly. And that is the only segment created unbelievable wealth in the last 30 years. And also, please realize the fact that almost 90% of the small caps, sorry, unless almost 90% of the large cap stocks, they took birth in the stock market as only small caps, including Infosys and Wipro. So, but you have to do your homework properly. Otherwise, your wealth can be destroyed in the small cap. So, do not compromise on those three parameters. Believe in India story, believe in domestic investors, believe in domestic market, to believe in domestic companies in the sense of companies which supply to the domestic investors. No, it depends on domestic demand. So, this is a theme for 2026 financial year, and wealth
Right.
can be again created.
Right, an interesting perspective, and of course, very crucial advice for all our viewers there. But big bets ahead of Budget 2025, expectations really from Budget 2025. What would you say?
GST has been a phenomenal in terms of success, in terms of penetration, in terms of collection. My humble request to the government is that now, look at creating more disposable income in the hands of the middle class, because aggregate demand is slightly slowed down. That's why we have the growth issue. So all innovative ways can be thought of to leave, more disposable income in the hands of investors. So something like, exempting education, insurance from GST. I mean, higher education or private education, tuitions, because this all can be considered as an input for the middle class to, generate income for themselves or for next generation. And also the direct taxes concession can be given. So if we can lift the disposable income, I am sure your real GDP, nominal GDP also will get a big boost, and then this 4.9, 4.5% deficit also will not be a concern. So this is a time for innovative measures to increase the disposable income in the hands of investors through tax measures.
Right. So tax measures really a big expectation from budget 2025. And now for those wondering that, look, as far as not just India, but all global stock markets are concerned, is 2025 really going to be the year of a reality check for global markets at large? What would you say to them?
Possible. So, what I said, the market weakness till March, it may even continue for the first half. But I want to tell you the insight which is based on the fact that whenever the global pain got maximized, India was finally the major beneficiary. All Lehman crisis, COVID pandemic, 2016 early deflationary condition in the world, they all created global pain. They created pain for India also initially. But in all three cases, India was the first economy to come back with vengeance on the GDP growth. It became a fastest growth thanks to meltdown in the crude oil prices, the material prices, and also even fertilizer prices. Post Lehman crisis, fertilizer prices crashed, and the subsidy bill overnight it came down like anything for the Indian government. So therefore, I am of the view that we are peculiarly positioned. While we have some pain, we also have to have maximum gain out of the global meltdown. Our weddings, our middle class population, that itself can give you minimum 4.5% GDP growth. So it is most unlikely that we will go below 4.5. So we are peculiarly positioned, to drive this minimum growth and benefit out of global pain. So that turned out to be India's gain ultimately. So ultimately, we will be the first one to recover. So if any chance, by any chance, the meltdown continues in the market, even till June, July, one should not worry. One should, keep investing. Yes, one has to manage the risk in terms of asset allocation between the fixed income and equity, and within equity, large cap and small cap. But never, have a tremendous pessimistic question on India and stay away from the market. And those who invested in, difficult conditions in quality stocks are the biggest beneficiaries of India's equity wealth story in the last 40 years.
Right. Thank you so much for your time and for sharing your thoughts and, of course, helping all our viewers decode the road ahead for India's stock markets.
Thank you very much.